and welcome to the NC podcast. My name is Natasha Collins and I am the host and founder of NC Real Estate, which includes its members club for landlords and property investors to come and build profitable property portfolios that completely align with their goals. I know that right now we are going through some choppy waters. We are learning new ways of coping. We are showing up for ourselves and being so resilient. And I have got something which I've been working on and updating daily, my COVID-19 and property investment in the UK working paper. If you haven't been to www.ncrealestatemembersclub.com/COVID-19, you need to go over there, click on the download button, get my PDF, and have a look at the new updates of what's been going on. There is strategy, there is useful websites, there's things that you can do when you feel like you might not be able to do anything, and it's to help you get through this as unscathed as you possibly can and put you back in control of the situation. It's tough. Tenants are finding it tough. We're all finding it tough. You have to be acting with compassion. You have to be asking people, how can I help? Even if you don't know how you're going to be able to help. But that PDF is going to give you some really good steps that you can take. It's completely free. I'm not asking for your email address. If you think I'm about to send you with a load of spam, I'm not. Go over there. I'll put the link below this podcast. Help yourself to it. It's yours. I'm updating it on a regular basis up until the point that this is over. So hopefully that's really useful for you. Okay, today I'm so excited. I've got Jackie Tomes from Tomes Homes with me. Hey, Jackie.
Hi, great to be with you.
Oh, thank you.
Crazy times.
I know, right?
Bonkers.
So Jackie is a property investment strategist, a property investor, and has built a property portfolio worth £6 million in under 6 years. Amazing credentials.
Thank you. Thank you. It's been quite an epic 6 years. Yeah, it's been pretty hard at various points along the way, but yeah, I feel really grateful for where we are.
Yes. Oh, it's amazing. It's so incredible to build it in that space of time. For those of you who are wondering, we have just before this podcast had about a 20-minute conversation about how we're dealing with this COVID-19 situation. I think it's because we're all in kind of, we've had things tipped upside down and told to relook at the way that we're doing everything, right?
Yeah, well, I just feel like we've been saying how it's been so frustrating to suddenly all of your, plans that you've spent so long putting in motion and property deals that we've been working on some deals for nearly 12 months and suddenly they're all up in the air and are they happening? It's really hard. Like, you're having to reassess everything, make decisions on where you think the market's going, decide what to push back, what to keep going with, and keep everyone else happy. Like we're saying, you've got to look after your community, your clients, your investors, your team, and somehow yourself in all of that as well. It's these are crazy times.
Mm-hmm. They really are. And you were saying that you've just today, and we're recording this, by the way, on March the 26th, so just today you were saying that you're feeling normal again and like you're back in control.
Yeah, first time in 10-11 days, something like that. So we're in France at the moment, and the lockdown happened first before the UK, so I think I'm a bit further ahead than many of the UK are because we saw it coming because we were experiencing it. So but I feel like we've risk assessed, we've opportunity assessed, we've made some tough decisions. We know when the next round of decisions need to be made, and now it's just like, right, on to just making the best of the parts of all of this that we can control and just letting go of the rest until such time that I can make further actions on them.
Yeah, well, that's all we can do. Those are things that we've all got to do. I mean, what are the things that you are pushing forward with and the things that you're letting go?
So our property projects that we were buying at the moment, they're on hold at the moment, particularly because they've all got refurbs associated with them, which obviously can't happen, and we're not quite sure how the market will play out in terms of the, how much the dip is going to be. Obviously, the dip's inevitable, just to see how that happens. So we are pushing back on that, and we're working with our team to share everything that we're doing with our strategy community. So when I'm not doing the property investing, I'm helping other people to run their property businesses. So we are sharing all the things that we're learning and implementing and doing in a useful way for the rest of our community to benefit from. So that's what we're really putting our energy into, just helping everyone else around us and making sure my clients are okay, and then just keep reassessing in a few weeks time where we move the property projects from that point.
Mm-hmm. Yeah, that's all we can do. And I know we were discussing mortgage holidays just before, and I actually think it's probably quite an important conversation to have now on the podcast about our thoughts around mortgage holidays. Do you want to go first?
Yeah, go on then. Chill out is my first response on the mortgage holidays. I think your business should be strong enough to be able to go for a period of time of uncertainty where you're not getting paid all your rent. So if you are in a position that you should be like that, then we shouldn't need to be getting on the phone to ask for a mortgage holiday when our tenants haven't even got a problem yet. And there's a huge package of support from the UK government. So a large proportion of the UK population should be able to pay probably all, or if not the majority, of their rent. So I'm talking from like a traditional single let point of view. Obviously service accommodation is a different kettle of fish, but if all of that is suddenly stopped, it's a different situation. So for us, we're not going to ask for a mortgage holiday. If this is 3 months, we've risk assessed the portfolio in terms of the sort of tenants that we have, and we think that about 17% of our rent is at risk of non-payment. So actually quite a small amount when you take everything in. So therefore, we factored in 17% of non-payment for 3 months. It's, you know, obviously it's not great. I'd rather it was paid, but it's not an issue. So yeah, we'll be standing firm and showing how resilient we are in the meantime. Your thoughts?
Yeah, I'm the same. I have been in contact with mortgage providers just because I wanted to know what the situation is, because obviously this is not a mortgage-free period. At the end of it,
a really bad name for it. It's not a mortgage holiday.
No, well, when you come back from your holiday, you have to pay back everything that you owe. And banks are doing this in a different way. Some are adjusting the payments afterwards. Some are saying that once you get to the end of the period, you might have to pay all of the amount that you had outstanding, not your interest payments, but if you had any repayments that you were making, then you would have to pay that. Or it's being added on to the very end of your term. Now, you then need to stress test with whether you can actually afford that increase, if it's going to make any difference or not to you. And also, I mean, we don't know quite how much interest is being rolled up on these 3 months. And some of the banks are offering these online forms where it takes 2 minutes, you fill in a couple of details and that's it. That's your 3-month mortgage holiday. You don't know how much that's going to be after the end of the 3 months, and they're just going to alter their direct debit for you. That's risky. That's more risky than continuing paying. Now, if you really are struggling, fine, you know, use everything that you've got. But as Jackie said, tenants should be getting money now. You know, there's a lot of help out there. And for service accommodation providers, if you are registered for business rates, there should be a 10 grand check in the post to you. Be taking these unless you need to, right?
Yeah, and I think there's going to be a lag anyway. Like really with landlords, I'm sure most of us aren't actually directly impacted yet because everyone's paid in arrears and we've only just really had lockdown in the UK. So unless you've lost your job, we're not going to really feel the impact until the end of April, early May. So actually then you can really start to assess the situation. So yeah, at the moment we think that for the most part our rents are going to be okay, that are coming at the end of this month, early April. Where am I? So yeah, I think we'll just need to just keep it cool, reassess, and I think risk assess your portfolio and your tenants first of all before just crying and asking for help when you don't really know what help you truly need.
Because this could be over soon, or it could go on for long. We don't know. None of us know. So Jackie, let's go into details about who are you? What's your background? For anybody who hasn't come across you before, tell me, how have you got to this stage in property investment?
So it's actually quite cool to be doing this podcast here because I'm currently in the French Alps, and it was back in the French Alps 7 years ago that I'm currently working in market research. I was having a week of annual leave on the piste. I love to ski. And for me, I just started to get that horrible sinking feeling at the end of the week because I knew I had to go back to work on Monday. It was a great job, but I'm not very good at being told what to do. And that's the problem with being employed. So that was when I decided I had to find some other way to have more control over my life. And I decided to start saving up to invest in property. So after that, I didn't know, I'd seen my mum and stepdad, they had a couple of buy-to-lets. So I'd seen that, but I didn't really know any of the logistics of how to do it. So I just started reading 18 months of just like geeking out on every book I could buy on Amazon, and also living the most boring existence because I just cut back all except essential expenditure and saved up as much as I could for a deposit for the first property. And it took 18 months, and I had to play the credit card game as well. But I bought the first property in July 2014 for £108,500 with a 15% deposit. And I put the refurb on the credit card, and I took annual leave from work to get involved and help out on the refurb. And it was bonkers, but I did it, and I bought the first property back then. And then off the back of that, I found out that actually other people had money who couldn't be bothered to do all the hard work that I had done in terms of going to B&Q and picking out tiles and slogging and doing loads of property viewings. And we started working with other people who wanted to invest money. So first of all, it was family members, and then it grew from there to being other people I met at property networking events. And so from that 18 months to buy that one property, over the next year, we went and bought another 8-9 properties. Whilst working full time. It was absolutely horrendous and bonkers and exciting, but thanks to all of that, it meant that I could leave my job. That was the phase one completed, and then from there we've now scaled up to buying whole blocks of flats. So before it was just individual units, and now we buy whole blocks of flats, and we rent them out as single lets. And so now the portfolio is worth about £6 million now. And they're all similar kind of value properties, like around the 100k, 150k mark. So it's been a roller coaster of a journey, and and now I help other people to do the same.
Fantastic. So what has been your best property deal to date?
I was thinking about this. I would say my best property deal to date has been a block of 4 flats that we bought in Margate back in, I'm going to lose track of time, 2018, I think it was. And it was because for us, we're all about replicating the same model, and we'll talk about that more shortly. But it was for us the culmination of many different projects and refining how exactly we were going to do a block of flats deal. So it was a block of 4 flats, and it took about 200k of our investors' capital to make it work. And we purchased the property, we refurbed it within a few months, we refinanced it within less than 6 months, and we pulled out 95% of the initial capital that was in that deal. And it just went so smoothly, thanks to everything that we had learned from many deals that hadn't gone smoothly, and refining what we were and weren't happy to do. So that for us was a real success, because it's a culmination of so much learning.
Yeah, amazing. So I think we should now go into kind of the strategy. What types of investments do you like to work on?
So we now, from initially just buying individual flats that we'd refurbish, just leasehold properties, we would buy them in areas that were good for capital appreciation, so outskirts of London. We'd add value through refurb, and obviously get that benefit of a bit of buying a bit below market value. So those 3 elements are what made it work as a deal. And then refinancing either after 6 months or after 2 years, depending on the deal. So now we've just scaled that up to do that on blocks of flats. So we only buy blocks of flats that have already been converted, or they could be purpose built, but generally they're conversions. They already have all their utilities split, so we do not deal with utility providers. We've had our hell dealing with those guys. If you want to deal with them, someone else can do that. We hate that part of it. So it must have utilities split. It must have either planning permission, or it's been done long enough ago that you can get existing use for it. And they've all the units need to be over 30 square meters, so that it just doesn't limit the lending opportunities on those units. And what we look to do is we purchase them at a good price. We add value through refurbishment, and then we refinance out the other end. Now, for us, uplift on cost is one of our key metrics. So we need it to be a minimum uplift on cost of 20%. Ideally, we push towards as close to 30 as we can get. And so what that means in practice is that the money that goes in on purchase, between 2/3 and 90% of that come back out on refinance within 4 to 6 months. So that's the broad strategy, and it's all that focus has been absolutely fundamental to us being where we are now, because we've been able to scale up really quickly because we kept learning more and more lessons about that one specific thing. Whereas if we'd have done, a bit of service accommodation, some HMOs, some flips, and mixed it all up along the way, we'd be so much further behind, or in a lot more risk right now, because you just don't know all the elements that are involved in it. So that's exclusively what we buy. We're based in Kent, so we buy right on the outskirts of Kent in Thanet. And that's all we do. As for us, we are definitely control freaks. I'm definitely a control freak, and we want to have as much control over the project as possible. And what we found when we ran a conversion in the past was that so much was out of our control. Like, everyone screwed us over: planning, building control, utility companies, a structure engineer. And so for me, I want as little ability for others to be able to screw the business, thanks to just limiting exactly what the model is.